Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Hey, well, good morning, everyone. You've got some slightly different faces today. This is our first Wealth Coffee Chat. We are the tax team. This is the tax team takeover of Wealth Coffee Chats for Wednesday. My name's Anthony Wolfenden. I'm an authorized financial advisor, and I'm here with my business partner and accountant, Daniel McPherson. Daniel, say hello.
Good morning, everyone. Hope we're all well this morning. Thanks, everyone. I'm Daniel, tax agent, FCPA. Been doing this for longer than I care to admit sometimes. So yeah, hopefully we can go through a bit this morning.
Yeah, so we're actually here to talk about, well, of course it relates to tax, but we're going to expand it out. It's going to be a bit more about sort of levies. We want to go over some of the changing ways in which government, plural, are both incenting us to get into the property market and also reaching into our pockets and helping themselves to some of our success. So we want to go over that, and we'll check out some of the ways they're doing that. So Daniel and I actually in our business spend a lot of time talking to clients about the ATO, about income taxes, about capital gains taxes. These are things that impact everybody in Australia. And what sneaks in and gets around the corner sometimes is what goes on in other levels of government. So we have state governments, they're involved, and we'll talk a little bit about that, and also local government areas. So Daniel, in the state governments, what's going on there across the country? I think Victoria's got a bit of a COVID hangover.
Yeah, I think we'll be doing a bit of a pick on Victoria Day today. But that's all right. They get all the events anyway, so we can hit them a bit. But I mean, yeah. So I guess all over each state government have their own sort of, I guess, rules and incentives applying to stamp duty and then obviously they've got their land tax as well. So I guess sometimes there's different opportunities in different states, particularly with stamp duty to get in. But then I guess the kicker is sometimes how does that impact you later on from the land tax point of view? So
correct.
I guess it's good to understand both sides because although it might be cheap to get in, they might then whack you pretty hard on the way through on ownership.
Yeah. So I guess the key walkaway initially that clients should have is you need to be careful when you're investing in any given state because there are fees, charges, and costs that change at the discretion of state and local government areas that you can't always predict in advance. And a good example of that would be Victoria. As we said, we might pick on them a little bit today. Victoria has a massive COVID hangover from some spending that was done down there, and they're looking to recoup some of that money. It's also traditionally been the state with probably the highest stamp duty across all of the states. So there was a massive barrier to entry to get into real estate in Melbourne. Real estate in Melbourne is not inexpensive. And so the amounts people needed to invest and spend, basically send away, not add as equity into the property, but basically give away to the government, was fairly hefty. Now, I think the state government in Victoria's actually come up with an incentive recently. So what's the latest incentive they have on the entry into the market?
Yeah, so basically they're sort of targeting, I guess, sort of strata properties, so those that are part of the strata plan. So I guess mostly units. I guess some of the smaller duplexes and things are going to get caught up in it as well. But they're almost sort of doing it as if it were a house and land kind of type of arrangement, where they're going to give you a bit of a concession on the build price. So then, in effect, you might almost be paying stamp duty on the land component.
Right.
And this will depend too. So if you're buying off the plan and it hasn't started yet, then basically you're going to get a concession for the construction cost.
Okay. And so this has been something that unit owners have noticed when they purchase versus people buying, say, house and land and doing a build. You can save a lot of money on stamp duty traditionally because you're only paying stamps on the land portion of the purchase. So if you purchase the land and then build, your stamp duty is much lower. People who buy nice units, everything's packaged up, so it's one purchase price, so you pay a higher stamp duty on the overall value of the acquisition. And so this incentive they're introducing is kind of giving you some of the benefits of a house and land if you're buying a unit. Units are strated, so have they limited this program on stamp duty concessions to strata only purchases?
Yeah,
is that correct?
They have, yeah. So it has to be part of a strata plan.
And what about the people doing the buying? Does it matter whether you're a home buyer or whether you're an investor?
So so they've opened this up really to so it doesn't matter whether you're going to be an owner occupier or an investor as well. So this is kind of basically a free for all for everyone.
Okay, so because it's strata, because it's investor or owner, excuse me, well, everyone's an owner, investor or occupier, and it's strata, it's going to be sort of units and townhouses is the focus. House and land, you already get a discount if you do the build.
Yeah.
Is there any limits on what you can buy? Does it like tap out at a certain purchase price or something?
No, it should be all inclusive of pretty much everything on a strata title.
Yeah, so there's no limits. Like this doesn't stop if you buy a really expensive unit. There's no limit in terms of purchase price.
Yeah, I think what they're trying to do is kind of almost stimulate basically like people buying or
entering the market,
construction, to try and get some extra dwellings onto the market and available for people to live in.
Okay.
I think is kind of the plan of this one.
Okay, and is there a time limit? Have you got to get the purchase done before a certain time?
Yeah, there is. So we've got basically until the 21st of October next year. So 21 October 2025. That needs to happen before then.
Is that contract date or settlement date?
That's contract.
Okay, so contract before October of next year. So basically you've got 12 months to buy into something strated in Victoria to save an absolute ton of stamp duty. Now, do you have an example?
So we ran a couple of the numbers. So if you were to sign the contract to buy an off the plan apartment for, let's just say, round numbers, $1 million, and no construction work had begun, basically the vendor, whoever you're purchasing the property from, will give you basically or advise you on what the amount spent on constructing the apartment is.
Yep.
So if in this example, if we say it's 400,000,
yep.
And obviously it's going to be an investment property, so that's still fine. So what you do from a stamp duty point of view is you take away that 400,000 from the $1 million purchase price, and then your stamp duty is calculated on the 600,000, not the million.
Okay, so let's go into brass tacks. If you were to purchase in the next year, what would the land tax be on that purchase, given that example, versus say what you would have paid last year?
So stamp duty?
Yep.
So stamp duty, if you were just to purchase normally, be about 55,000 on a mil.
Yep, 55K.
And then if it's sort of like about that example, if it's about 400,000 for the construction, stamp duty is going to be just over 30. So it's almost like a 20 grand saving.
It's over 20 grand saving.
Over 20 grand saving, yeah.
Okay, between 20 and 25,000 saving. That's
Yep.
money you don't need to reach into your bank account. No, don't need to pull out of your offset.
Yeah.
Don't need to go and save for a decade.
Yep.
To buy. So this is really quite a good incentive to get people into the market.
So that, yeah, so really, because normally you've got to fund the stamp duty yourself. So that if that can give you an extra 20, 25 grand still.
Okay. Well, there's a bit of a back end to this, of course, because they've introduced land tax changes down there where the threshold of land tax dropped.
So they reduced it to a threshold of 50,000. So we're seeing heaps more people get caught up in this, and it's a really significant number,
right.
that are now liable to pay land tax in Victoria because of this drop threshold. So I guess if you use the same example of a $1 million property, I think we did a little bit of a, I guess, sort of maybe not allocate the land value at 600 because that was pretty high.
Yep.
If you do it sort of like around sort of 300 or so, or even if you use the 600, it's going to be like a grand per annum in land tax.
So historically, in previous years, before the threshold dropped on land tax, for this type of investment unit, there might not be any land tax at all.
Yeah, most of the time.
Investors, not homeowners, but investors buying in Victoria, saving themselves 25 or so thousand in stamp duty, might actually see a land tax bill of, high hundreds to very low thousands of dollars for the same sort of property. So they give us the 25 and then they take back one.
Yeah.
And so they'll claw back the 25 over time.
Well, they do have the hangover that they still have to keep in mind.
Yeah. So the land tax changes were sort of purported to only be for a short period of time. But I think, honestly, we're not, once they've got their hands in your pocket, I'm not sure they're keen to take them out. So we'll see.
All the state governments love a levy.
Yeah. Well, look, that's good input on Victoria. I guess the point of that conversation is watch what's going on in other states. They're going to be keen to reach in as well. There's some stuff going on in LGAs as well. We've got a couple of examples there. Local government areas are also reaching in.
So, I guess just to bag Victoria one more time, they have just introduced their what they're calling the Airbnb levy of 7.5% on short stay as well. So
now wait a second. So you buy the place, you get cheap stamp duty, you got to pay a little bit of land tax to the state government. Now, if you want to short stay that out,
so 7.5%.
The Vic wants a piece of that too.
This is a state government levy as well. So 7.5% of the gross amount.
7.5% of gross.
Yeah.
You don't even get to net out your expenses before you pay the levy.
Yeah, just straight on top.
Oh, wow. Okay.
So there's 7.5% of your return gone straight away on your short stay.
Okay. Well, look, I think I've got you beat. 7.5 is pretty bad. I know Megan and I looked here on the Gold Coast. We had a place we wanted a short stay. We went to council and said, hey, we'd like to short stay because they want to know now. And they said, okay, there's a $10,000 application fee. You're welcome to pay the application fee and submit the application. Just so you know, we're going to deny it anyway. Which was nice because I really would. The application fee is not refundable, so it's very nice of them to tell me basically don't bother spending your money.
Yeah.
But yeah, they're apparently the property we have here has got to be for homeowners, and short stay is not good. I mean, Gold Coast is kind of a holiday destination, but for whatever reason, a council that is very keen on developers is not so keen on short stay.
Yeah, and that's something you've got to be careful of, no matter really, I guess, where your property is, because they're imposing, I guess, these, like the local councils are imposing these fees if you want to do short stay or Airbnb.
Yeah. So the destinations that are really getting whacked, I think, are the ones that we know off the top of our heads, the ones that are really popular destinations, holiday destinations.
Yeah.
So Byron's got stuff going on. Sydney and Melbourne is broad, large areas have got stuff going on. Noosa. You need to be careful where you're investing, have been a historical get through first, or just be really careful. Certainly if you're entering the market and looking to short stay, you should be doing a ton of research before you buy at 3 levels of government: federal, state, and local government area. We've been going about 15 minutes. Is there anything else that we should let the clients know today that's important in this area, or just watch out?
Yeah, I think it's just to do your research in the particular area that you're buying and have a good understanding of what you're going to do with the property, particularly if you are thinking about Airbnb. Because I know the returns look really good initially, but then once you factor in all these costs and all the extra taxes, I guess we've got to call them that you've got to pay, whether it is worthwhile.
Okay. Awesome. Well, look, we've covered off a few things for folks on the line today. We'll probably wrap it up. We're sitting right at 15 minutes, which I think is the time we're supposed to do. So what I'll say for Daniel and myself, guys, is happy investing. Don't leave any money on the table. And for sure, make sure if you can, you stop people reaching into your pocket and taking money out, because there are 3 levels of government who'd like to do so. And if you'd like to have a chat with any of us, there's a link at the bottom of the window. Please feel free to click on it and we can have a chat and help you out. Okay. Thanks very much.
Thanks, everyone. Have a great day.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.